this is Pat Walker at MissionWinners.com, making a training coaching video for everybody. Years ago, I taught on the university level. I taught advanced classes. One of my finals was 24 pages typed, a strategic planning class. And I didn't do it to be a jerk. I did it because I love teaching and I wanted to make sure people understood what I was talking about. Well, in this instance, as far as the markets are concerned, I think it's important to really be thorough, precise, analytical, and logical. We can quickly fly out of control reading a bunch of different stuff on a bunch of different websites. And I'll tell you what, you'll find very quickly if you do that, after a while, you will lose your way being impacted by information that may not be relevant to you. So just please be careful. Please be careful. Find some basic foundations and stick with them. I'll share this with you, and I'm very fortunate. I've met Bill O'Neill twice and sat down and talked to him years ago. I learned a lot from the man. There's other people that had a profound impact on me. I'll share this. This is very important. We are looking to make money in the markets. That's why you're here. That's why you're listening to me. You're not doing it to hear my voice. That's for darn sure, and I don't blame you. The idea is, hey, I want to learn how to do this stuff. I'm tired of trying this and trying that and being caught by the wind and the sails. Oh, let's do this one now. Oh, this looks really good. Oh, look, somebody on Twitter is talking about this. Oh, wait, they talked about this on Facebook. No, turn off the noise. There's a tremendous amount of emotion in social media, not just in the realm of politics, but in the realm of investing. Find a couple of foundations that work. They work, and own them. I'm going to give you an example of what I mean. This is from a book. I'm going to show this right here. This is from a book called 40 Great Stock Market Winners. This was published by Daily Graphs, Bill O'Neill and Company, William O'Neill and Company, back in the late 1990s. And you can say, do I have to read all this? No, you don't. But these were stocks that made tremendous moves. You say, oh, you mean they went up 20% over time? No, stocks that move up 500, 1,000% over the course of months, years. But they all had certain things in common. Right here, 87% of these stocks had earnings up 30% or higher before their move. 87%. Folks, you would go to the casino with odds near 90%. Wouldn't you? I would. 71% had earnings up 50% or higher in the quarter prior to their move. Take the average. What am I saying? Basically, 80%, almost 80% of these 40 great stock market winners had earnings up 40% or higher. I'm just taking averages here. 80% had earnings up 40% or higher. Own that concept. Turn off the noise. Point two, 86% of these stocks had sales up 30% or higher prior to their move. 63% had sales up 50% or higher. 30 and 50, what's the average? 40. The average of these two numbers is near 70. What am I saying? I'm saying approximately 70+% of these stocks had sales up on average 40% or higher. Now you have an edge. 2/3 of the examples were the result of an industry group. All of them had positive earnings estimates. The average relative strength of the stocks prior to their move, before their big move, was 92. We have made screens on MarketSmith to help us find these super stocks. That's what we're looking for. I'll take it a step further. IBD research, Bill O'Neill research. You can read all this. I'm going to leave this up for you. Take notes of this. Take a screenshot of this if you have to. But right here, overall, this means nearly 50% of a leading stock's price performance is related to the industry and sector. 50%. Combine these variables. We know 40% of these stocks on average have earnings up, and I'm going to slide it back here. Right in here. Earnings up 40% or higher, 8% of them. Sales up 70% or higher, 70%. Average sales up 45%. Now you've stacked the deck in your favor. Average relative strength, 92. Don't look for junk, look for leaders. Leading stocks, leading groups, and you can say, whoa, leading stocks, what do you mean? Let's quantify that statement. They have either great earnings and or great sales. They don't need both. They have a higher relative strength, and they are in leading groups. Now all of a sudden, folks, you have an edge. And this is what we teach all the time at Mission Winners. It's not just the idea about giving ideas, giving stock ideas. I want you all to think about this. To know that 2 + 2 = 4 is knowledge. Oh, I can memorize that. That's done. But to know why it does is knowledge that's transferable to other situations. That's power for you. We teach the specifics of what are the traits of super stocks. We show you how to find them. We show you how to buy them. And we show you how to sell them. Anyway, I wanted to share that with you. Again, I've been doing this since 1986, and there's a lot to try to figure out, or you can speed up your learning curve. I wanted to share it. I hope this helps you. I'm going to recap. Focus on stocks in leading groups. Focus on stocks with higher relative strength. Stay away from low-priced stocks. Look for stocks that have great earnings and or great sales. If you do those things, you will dramatically improve your odds, and I hate to use that word, your odds of financial success in the markets. And then you are in control. You are. Last point I'll make. Always focus on clean and simple chart patterns, which we teach, and always limit losses. Never argue with price. A clean and simple entry will give you a clean and simple exit if you're wrong, with a much smaller loss than 4 to 7%. Manage it tight. Last point, no 5-minute charts, no day trading. You'll do better. I promise. And thank you.